until Bitcoin gets to the size that is at least, I would say, a quarter to a half the size of gold, it's going to continue to be like this. It just needs more. It needs to be bigger. It needs to have more liquidity. We just must recognize that it is still a nascent asset, and it's going to be volatile. It's just going to be volatile to the upside over a long period of time, and that's the point. All these things would have a different impact to this asset, I believe, and people will find out pretty quickly how powerful and how valuable Bitcoin is. We are at 130% debt to GDP here. Yeah. We have massive global leverage. The difference is the gig is up. They can't have another great recession. They can't. They will print more money to get out of it because they can't have it. That's the issue. The issue is and when I say they, I mean central banks and treasuries.
James Lavish emphasizes that Bitcoin, despite its growing popularity, is still a relatively small asset compared to traditional financial instruments like gold. This small size makes Bitcoin highly susceptible to market manipulation, particularly by large hedge funds and institutional players. Lavish points out that these entities can exploit Bitcoin's size and liquidity by strategically entering the market to drive prices down, especially when they can see leverage positions on the screen. This kind of market behavior has been witnessed repeatedly, contributing to Bitcoin's notorious volatility. The presence of these hedge funds in the Bitcoin market underscores the asset's growing relevance in the broader financial ecosystem. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We have to point out that how small this asset is. It's tiny compared to the other assets we're talking about. And it can move around and does move around because of large players. And so they can just come in overnight and hammer it down because they see, you can see what all the leverage is on. You can literally see leverage on your screen and decide if you want to try to wipe that out and push it down to, to benefit your own book. We've seen it happen over and over and over and over again. And so until Bitcoin gets to the size that is at least, I would say, a quarter to a half the size of gold, it's going to continue to be like this. It just needs more. It needs to be bigger. It needs to have more liquidity. And the other thing is, this thing trades 24/7. It is an opportunity for traders to move around risk assets on the weekend. They look at this. If you're a hedge fund, and we're not talking about tiny hedge funds, we're talking about like 10, 20, $30 billion hedge funds that are moving around this thing. And I've seen them on the 13D filings. So you know that they are moving around this thing on the weekends. You can see it. They're not just in the ETF. They're hedge funds. They can buy and sell whatever they want. It's not like a family office. So we just must recognize that it is still a nascent asset, and it's going to be volatile. It's just going to be volatile to the upside over a long period of time, and that's the point. We have to remember that Bitcoin it's not always the tip of the risk spear. It has been mostly, but it's not always the tip. So we have to define what is the event we're talking about that Mike is concerned about. Is it just a plain vanilla slip into recession, all risk assets get sold off? Or is it something more like we saw last spring, which not this last spring, the spring before, where you had a meltdown of the banking system and Bitcoin was at its close to its worst. The sentiment on it was almost near its low, and then we have a wipeout of a banking crisis with Silicon Valley Bank collapsing, and Bitcoin was up 50%. So what is the fundamental event that we're talking about? Is it something like a plain vanilla recession? Is it civil unrest? Is it banking unrest? Is it a collapse of regional banks because of a wipeout of commercial real estate? Is it something bigger? Is it something like we don't have an election? I mean, Like all these things would have a different impact to this asset, I believe. And people will find out pretty quickly how powerful and how valuable Bitcoin is when it can operate outside of the system that can be controlled by the people who are causing these things. So that's something that is not, that it's not in its value yet. It is not in its fundamental value yet, but we've seen hints of it at certain times, and that's something we have to also take into consideration. Cut spending and allow for a prolonged recession. That's one choice. Or we could turn on the fire hoses again and start inflating away some of this debt and leave inflation hot for 3 to 5 years, where it does actually push up nominal GDP. And kind of bridge the gap between today and when AI really hits and we get that so-called productivity miracle, where we have serious productivity for a lot less debt is the bet. And that's what we're kind of, those are the two choices right now. And I just don't think politically if you go back to incentives, right, Mike? And the incentives and the incentive structure and the structure of our government and how they are incentivized, it's to spend money for their constituents in order to get the votes. That's it. I mean, the problem is the structure. It's not, I just don't think there's any rational thinking past that. It's only about getting reelected, and how do you get reelected? Spend money. The reality is still that there's tremendous pressure on Powell to cut rates. Tremendous pressure. It's price. You could pull it up on your Bloomberg screen. I don't have Bloomberg up right now, but it's over 100% probability that he's going to cut 25 basis points in September. That's number one. You've got Warren talking about it. You've got various other representatives talking about it. He's got to cut. He's got to cut. He's got to cut. Cut, Chair Powell. You must cut. And so the question here is he going to have enough firepower to? Because remember, again, what we cannot go into a deep recession. So it's going to be much easier for him to engineer a so-called soft landing if he cuts just a little bit, waits a minute, sees what happens. Maybe we don't have another cut until December. I think he's going to cut in September, November, and December, and we're going to get over a full percentage point of cuts because of what we talked about at the beginning, which is the reality of the job situation. The job situation is joblessness is growing, and that's not going to just reverse spontaneously. Like you see it historically, when we start losing jobs, it accelerates. And so that's the problem. He's trying to get ahead of that. And if he can point to that, because we just have just enough inflationary data that he can point to the jobs number that we don't want to lose too many jobs, we're going to cut. And because we feel like we're now above that neutral rate, okay, that's nobody knows what the neutral rate is. He can say whatever it is. He can pick a number out of the sky and say because nobody can really calculate that. We've seen that. So there's so much argument about where the neutral rate is. And so if he has enough firepower, he can cut. I think he's going to, and then you get this continued.
Lavish also touches on the growing pressure on Federal Reserve Chair Jerome Powell to cut interest rates, a move that could further fuel inflation. He predicts that Powell will likely cut rates in the coming months to engineer a soft landing for the economy, despite the long-term risks associated with such a strategy. This environment of persistent inflation and central bank intervention could ultimately benefit Bitcoin, as more investors seek assets that are not tied to the traditional financial system and are less susceptible to inflationary erosion.
We are at 130% debt to GDP here. We have massive global leverage. The difference is the gig is up. They can't have another great recession. They can't. They will print more money to get out of it because they can't have it. That's the issue. The issue is and when I say I mean central banks and treasuries. So we will expand the money supply to get through a tough recession.
No disagreement there, and we're all turning Japanese.
We're all turning Japanese, exactly. But that's my belief. That's my belief, and I keep talking about it. All roads lead to inflation. All of them. Every single road leads to inflation. now you hit on why Warren is so against Bitcoin, because she wants to go down the CBDC route, and she doesn't see how they can coexist, and so that is the issue. Ultimately, you've got a few of them that are going down that route, and until they realize something you said just at the beginning of your monologue there was once they realize the incentive structure is to get reelected, once they realize that they've got a lot of people on both sides of the aisle who want this, that they're going to lose them if they are against it, then they're just going to let it be. And we can't discount the power of Fidelity and BlackRock. They are extraordinarily powerful, and they're not going to want some onerous regulation. Now, that you can go to what you just said is wallet address being, registered. They don't care, because it just means probably more people it's easier just to go get the ETFs. The data is the most important thing, is what you said, Dave. I mean, that's reality of what's going on. We don't really know what's going on. We did see the unemployment number jump up. We're going to get more readings this month, and we're going to have a little bit better idea. But when you look across the board and you think about how credit expansion has stopped, which means that people are at their limits, and you're seeing the default rate for credit cards up over 10% now. That's a problem. But then you get these strange readings of the continued expansion of the consumer, like this last week, where we had great retail numbers. So it's a very difficult answer, and the problem is there's so much noise, and something like this just shows us how much noise is in the data. We don't know exactly what's going on, but what we do know is that there are pockets of recession in the economy, and how big those pockets are, well, that's the question. And are they growing? And my guess is they are growing. Those pockets of recession, that the areas of the economy, the sectors that are interest rate sensitive have been struggling, and they continue to struggle, and they will continue to struggle. So, and now we get some more Fed data coming up, and meaning some insight from the Fed and what they're thinking this week. And we'll have a little bit better idea of whether or not we're going to get some relief there. So those are all the questions, but bar none, you're right, Dave. The most important thing for people when they go to the polls in November is, how am I doing? How am I fiscally doing? Do I have a job, and am I doing better than I was 4 years ago, period?
Lavish also discusses the political dynamics surrounding Bitcoin, particularly the tension between proponents of central bank digital currencies CBDC and Bitcoin supporters. He notes that figures like Senator Elizabeth Warren, who advocate for CBDC, see Bitcoin as a threat to their vision of a controlled financial system. However, Lavish believes that as more politicians realize that their constituents support Bitcoin, there will be growing pressure to allow Bitcoin to coexist with CBDCs. The influence of powerful financial institutions like Fidelity and BlackRock also plays a role in this debate. Lavish argues that these institutions will resist onerous regulations on Bitcoin, given their vested interests in the asset. As a result, the future regulatory environment for Bitcoin may be shaped as much by political and institutional pressures as by technological and economic considerations. Please like and subscribe my channel.